A very good morning to you, traders. We're done. Powell's done, finished. 2 days of Powell, all said and done. We move on to the next thing. Morning, Kay.
Hey, everybody. Hi, Ryan.
Morning. Morning to all you traders as well. I don't know what we're going to get today. Maybe a little bit of consolidation going on. Market all waiting for tomorrow's data to drop. Not much on the cards today. We do have challenger layoffs and initial jobless claims, so final bits of jobs data, if you like, before the NFP tomorrow. So I'm not sure, as I say, not sure what sort of day we're going to get. Got a few moves this morning, but I don't know, not breaking anywhere new or going anywhere significant, but we'll get stuck into that shortly. We'll get through some of the headlines. Chinese headman Xi has asked the military to boost its power against strategic risks, according to state TV. He is seeking to boost China's defense technology industry. All part of the geopolitics going on there. There's been reports or stories that some Chinese ships cut internet cables to one of the Taiwanese islands. Apparently a Chinese fishing vessel about a week ago was suspected of cutting one cable out at sea, and then 6 days later a Chinese cargo ship accidentally, inverted commas, cut a second one. So potential shenanigans going on there, depending on what you believe. No proof that it was intentional, of course, but you know, a little bit two things happening at once, a little bit coincidental, but we shall see what comes from that. There was some data, inflationary data, out from China last night as well. PPI came in. It's on this one. Hang on. PPI came in a little on the soft side, month on month, down 0.5%, was expected to rise 0.2%. Year on year, that number came in less than expected, up 1% versus 1.9 expected. Sorry, CPI. I said PPI. CPI came in a bit softer. PPI also came in softer, though, at minus 1.4%. So no real inflationary pressures potentially showing up there in China. Something to watch for as if their data starts getting better and they start recovering further from that virus wave over the last few months. But nothing there to get any interest as to whether the PBOC may start to take a more neutral to hawkish stance there, but we'll keep an eye on those numbers anyway. While we're in the data, Japan's GDP final numbers, rear view mirror stuff, but coming in softer than the prior estimates, coming in flat in the end versus 0.2% prior. Year on year, also softer, 0.1% versus 0.8% expected, and that was the previous flash number, I think, as well. So a bit of an improvement over Q3, but not by much. Pretty much following a lot of what we're seeing in global economies, with a bit of flatlining going on towards the end of the year. The lower house in Japan approved our man Ueda as the next BOJ governor, also approving his deputies Hamino and Uchida, and the next hearing, I think, in the upper house is tomorrow, so pretty much formalities at the moment. So all signed, sealed and delivered by the last couple of signatories on that one, and we'll get to see what they have to say for themselves in April. Investors have apparently turned more bearish on Asian FX. Analysts and economists polled cite China's tepid growth target and some renewed strength in the dollar after Powell and his warning of higher and faster possible interest rates. The bigger bets are going on shorts on the South Korean won and Chinese won, which apparently have reached their highest since last November. So a bit of a move out of Asia FX, obviously a lot into the dollar because of the shift from Powell. Riksbank's Bungie, I think his name is Bungie, is continuing the bit of a media offensive from the Riksbank. I think we've had Riksbank every day this week, and he says there's still seeing a hike of 25 or 50 pips coming in April. So a lot of a lot of drum banging coming from the Riksbank at the moment. Bank of England's Dingler says that given little evidence of further cost push inflation, further tightening is a bigger risk to output and the medium-term inflation outlook. So a little bit of dovish comments from Dingler there, particularly regarding future rate hikes. While Mann was speaking about the pound the other day, Dingler says that the exchange rate is less of a worry for me than other factors. Chancellor Jeremy Hunt might give UK firms some tax relief on capex. We've got the spring budget statement upcoming, so lots of talk about what he may do in that. But giving some tax relief to capex would be a potential booster. Morgan Stanley have revised, or they see the ECB revising down its forecast for headline inflation at the next meeting to 5.8% from 6.4% year on year. But they think the ECB will revise up the core inflation forecast from 4.2 to 4.9%. Bank of Canada left its rate unchanged as expected at 4.5%. The comments are pretty much standard as we saw previously, prepared to increase further if needed to return inflation to target. They did drop language about the economy remaining in excess demand. So slight change there, but nothing too much to throw into trading. They say the latest economic data remains in line with expectations overall. Inflation will come down to around 3% in mid-2023. So that passed under the bridge pretty much without much ado. ADP came out at 242,000 versus 200 expected. So a little bit of a move up on ADP, or a beat of expectations there. Not too much reaction in the dollar really on that number, given the fact that it was way out last month, the market not really sensing any clues from this one this month. And then we got Powell, number 2, his second appearance in front of the bigwigs, and a bit of a walk back on what he spoke about on Tuesday. He stressed that no decision has been made on the pace of rate hikes, and particularly for March, said we have not made any decisions about the March meeting and it is data dependent. We have important data before the March meeting, and the terminal rate is likely higher than expected. So a repeat of that line. He said the costs of failing to control inflation would be much higher than the costs of controlling it. And slowing the pace of hikes this year is a way to better watch for the effects of lags. He says he hasn't seen the JOLTS data yet. He was asked a question again on some of the data points, and JOLTS was out obviously yesterday as well. That beat expectations. Let's call it up so you can have a look. Where are we? I've lost it. There it is. JOLTS coming in at 10.824 million versus 10.5 million expected, down on last month, but still a beat. So nothing really to take from that. One of the subcomponents of that, the quits number, was down slightly. That's a number one can look at to gauge churn, if you like, in the jobs market. People who trading up jobs potentially. is a strong sign if those are running quite high. There were notes in the JOLTS report about wages slightly softening in some sectors, but they still remain elevated, and how those may play out towards inflation and the like. But overall, not really a huge amount to take from that. JOLTS is still running very high, and there's still a big ratio between unemployed and job vacancies, which is very large at the moment. Citi joined the bandwagon of changing their Fed expectations. They see now a 50-point hike in March, and the Fed terminal rate moving to 5.75%, joining other banks like Goldie's in those terminal rate numbers there. But a lot of ramping up of 50 pip hike expectations. It really has switched at the moment, and I think it's a difficult one to think about because they've just obviously not long gone down to 25s, so suddenly going back up to 50s. Kay, do you think that would damage the credibility again a bit
of the Fed?
Yeah.
I don't know, because I always have an issue with this term credibility. Everybody's talking about credibility. I mean, for as long as I'm working, central banks haven't had any credibility. But now we are saying that Volcker had a lot of credibility, and he was the best central banker ever. But when he was in office, the market wasn't thinking that at all. Could they go back to 50? I think that tomorrow's job report may be the clincher for that one. If we see a give back, even not too much, but bringing the job openings or the job creation back to more down to earth levels, it could put the market back on a 25 course. But if we in turn get a and I would call it really a surprise, because you can't really have bumper data after bumper data, right? In the job market. But if it would come in again a very strong one, then I think the 50 is very possible. It's very possible.
Yeah, I just think it wouldn't look good. I know what you're saying about credibility, but it wouldn't look good. You just basically slowed because you told everyone you want to see the effects of hikes coming through, and now on one or two data points you're ramping back up again. But
you've had really, apart from those one or two numbers that came in below expectations last week or so. All the rest is still running extremely hot, right? And the job openings are continue to run higher. By the way, there were like major banks thinking that the jobs would miss yesterday, and we again have a higher number. I mean, there's something about the dynamic in the U.S. economy right now, which is, I mean, it's starting to be surprising. Even if we could have argued that, I mean, the doomsayers, it's again thinking we are going from expansion straight away into the worst recession in history. That wasn't going to happen. But even with it not happening, we have to admit that even those who were not thinking, and I wasn't thinking that the economy would completely go from 180 to minus 100. It's starting to surprise me how well those numbers are holding up. So I expect somewhere down the line for those numbers to start the heat coming out of them. But then you again have a JOLTS opening number which is much higher. So will it attack their credibility? Well, I mean, it's got destroyed because they were too late to act on inflation. And but then we already said, yeah, well, now they probably will be stuck for longer into in the tightening cycle. So why not, mate? Why not? And then perhaps they can do a 50 and then say like, okay, now we are where we want to be, and now we are going to let it play out, and then announce a pause. No more, no less. Well, I mean, it's just a possibility, For the time being, I'm really very open-minded on what's to happen. But and as I said, I'm data dependent, and I don't know whether it can shoot their credibility even more down than what it is already. Really, I mean, I don't have a real opinion about it. You know, we trade stuff. It's better to trade the stuff that we think is either wrong or where we see discrepancies compared to what the norm would be. And I'm really very happy to let the credibility chat over to all those FinTwit self-proclaimed propeller heads to talk about credibility or what the central banks should have done and what they have done wrong. And you know, I mean, I'm actually I'm pretty open on all of that. I'm just saying that if it's wrong, then I'm going to trade it the other side, and that's it.
Yeah, I mean, and that's the important point. You know, when I talk about credibility, it's not so much because I want to, you know, do some showboating, calling the Fed wrong or anything like that, but it's this sort of thing that creates trading opportunities. You know, the market has gone heavily now towards a 50 pip hike in March. I think they're wrong. I don't think the Fed will go a 50 in March unless we get some super, you know, CPI data jumping, you know, 40 pips or whatever, another 500k in the NFP, something like that. It has to be some real outlier data, I think, for them to jump to 50, because as much as they're not beholden to the market, they're beholden to businesses and the US population, and suddenly going from slowing to 25s to ramping up to 50s and then a pause after or dropping back down again, you know, that's not how they want to, you know, send a message to the people. They want to show that they're in control. And if they have to jump to 50, then pause or back to 25 the month after because the data's turned again, they're becoming like day traders, if you like, on interest rates. And that's just not a situation I think they want to get into. But for this situation, I don't think they go a 50 unless there's some real outlier data. And even then, I think it will be a push. They can just carry on doing 25s for longer and still get there. So yeah, if the market is going to go too far towards a 50, that tells us where the price risk is. The price risk is market expects 50 at the March meeting, they only go 25. And that's what we have to look at for trading. And if I feel that strongly about it and dollars rallying and yields are rallying because the market's expecting 50, I'm going to think about going the other way. On the basis that they don't do a 50. But, you know, that's exactly what Kay said. We can talk about central bank's credibility as sort of paper filling, but it's whether there's a trade there or not that's most important to us. Just taking it across to the old Bidden. He's come out with some budget stuff, and apparently his budget is going to eliminate the tax subsidies for the oil and gas industry. Not a big vote winner for that one. And also he's going to apparently, reportedly going to urge a 25% billionaire tax and big levies on rich investors. Again, not exactly vote winning budget ideas there. So we'll see how that develops in the market. Whether some people think that maybe it's time to take some money out of the US and take it elsewhere. These sort of headlines can do that for a country. You saw exactly that with the UK and the trust stuff last year. That's about it for the on the headline front. Not too much going on. I say not too much going on this morning as well. We are seeing a little bit of softness in the dollar, but it's not wholesale. Dollar yen coming off from up in the 137s down to the 136s. What do you make of it, Kay? Just a bit of mooching around with nothing better to do for the moment?
Absolutely. There are some voices out there, and we've talked about it, that Corona may go out with a bang tomorrow, and that is exactly what's being traded. I mean, no more, no less. If for people who have been long in dollar yen, it would be ridiculous not to take profit close to 138. And for those who for those who were short, they probably have been whacked out above 137, and then perhaps trying to re-enter a bit and then put their stop above 138. I mean, I think it's just as simple as that. And then a bit of percentage chance, but whether it's only 15 or 20% or 10% chance that Kuroda may go out with a bang and widen the YCC band again to 75 BPs, or yeah, he won't do more than 25 at a time. But the possibility is just there, and you can't ignore it. So that's the percentage traded, and I mean, I'm not even I'm preparing levels for the Bank of Japan in a few instruments, but I'm not even thinking of trading in today, honestly. I mean, it's random. It can go back to 136.60 or 135.5. I mean, I have no clue. Really, today I don't want to touch it. It's complete randomness.
Yeah, no, I agree with that.
And let's not forget, and we've been talking about that tomorrow we have this combination of Bank of Japan and US jobs report. I mean, is good. Tomorrow is a potential very big mover for dollar yen if you combine the two.
Yeah, exactly.
And so I don't see any reason to trade yen today apart from those who are managing positions already open.
Yeah.
And that's it. And you can talk about techs in between. Yeah, there's a little bit of a support right here actually, and then 135.80, and then 135.30.40, but and resistance at 136.60. You want to trade it, be my guest. But I mean, if you buy it here ahead of the support where we are at, and it goes to 135.80, and you're going to be stopped out or so, because there's just one flow in, you're going to be looking at a 30 or 35 pip loss. And either side, you can sell it here because you think it breaks, and then you get stopped out above 136.60 again, and that creates a handicap for going into the BOJ NFP tomorrow. And I just don't want to have that handicap. I don't want to look at 30 or 40 points lost because of a random trade before the real show is starting.
Yeah, no, I understood on that. And Ali asked the point, about range trading before big events and stuff. Yeah, you can look at it two ways. If you're going to trade it, pick your levels. That's the only thing I'd say. Dollar yen, I tried a short yesterday, 137s into 137s. Managed to get some away in for 20 pips, and then more in the power blip. Added back when it got up to 137.02. Got stopped out in the 20s after that. So and then this morning you come in and it's 100 pips lower. So it is random, but if you want to trade it, pick your levels. Despite what Kay says, if I see a move down here today and I like the reason behind it, and we look like hold it, I might get the sniper rifle out. I'm not going to be looking to hold it over the Bank of Japan. If I get 20, 30, 40 pips in it, I can lock in some profit, bring my stop up, so it's a no risk trade. Fine, I'm happy to let it go for the rest of the day. I won't be trading that if it happens at 6 o'clock tonight, though. No chance. So yeah, you can snipe your levels. We've got lots of levels going on in a lot of pairs. Euro dollars moved away a bit from the lows. If I get to a move to 105, I'm more than likely to have a go. If again, I like the reason why it's gone there. It's not big news, not big headlines or anything like that. The upside is a bit different. I'm not keen on messing around in the middle until maybe 107. 105, 107 is my range and has been for a while. So that's what you want to do. If you want to trade in between these big events, first thing I suggest you do is you cut your trade size. Okay, like Kay says, you don't want to get in a trade in the middle of a range and find yourself 20, 30 pips offside and the market's doing nothing and you're sitting wondering what to do next. Be patient with your trades. If you don't get your levels you like, don't trade it. Simple as. If you're trading for the sake of trading, then you're potentially on a hiding for nothing. So if I don't get 105, have a look at 107, fine, so be it. I don't trade. But you go through your charts, you identify your levels, then you score them, you knock out the ones that you feel, maybe they're a bit middly or not too strong. And then you're left with maybe 1 or 2 levels that you would be happy to trade, and you wait for them. If they don't get there, they don't get there, move on, wait for something else to trade. You know, dollar CAD's a bit of a similar situation for me. I'm short at 137.88. Didn't get anything, didn't add anything on closer to 138 because of when it traded and getting ready for the show and whatnot. But you know, it's not moving away from the level. This picture is similar in a lot of pairs. Just showed it in euro dollar. We're getting highs, we're getting lows, but we're not moving away significantly from it. Staying very close in tight ranges. And you know, there's nothing to do here unless you're an arch scalper. There's nothing to do here between 137.90 and 138.15. You know, that's what, 25 pips to mess around with if you want to do such. You know, by the time you've taken spreads into consideration, you know, maybe you lose a pip, 2 pips either side of the trade. You're now down to trying to make money from 21 pips. So if you want to trade it, wait for decent levels. Euro sterling, another one. We're back under 89. Been mooching around this 89 level. Can't get above 89.20s. Now we're heading a bit lower. This is a bit more on the fact that cable's up a bit more than euro dollar is up. It's the volatility move that we often see in this pair. This pair can trade 2 ways. It trades on the volatility between the euro and the pound versus the dollar, and it trades on the fundamentals. At the moment, I see nothing in here that is really driven by the fundamentals. Yeah, we've got a bit of a divergence play perhaps between the Fed, the ECB, and the Bank of England, but not when you're talking about 30, 40 pip moves. It's not. This is just volatility. So when you get moves that come from volatility, I don't trust them as much as if it's a move that's driven by the fundamentals. So for now, this one's probably still trading 88 to 89 until something materially changes. I'm happy to trade that range. I've added at 88, so I've been knocking them out when we get up halfway, get up to the 89s, keeps them on for the core position, look to do a rinse and repeat. But in the middle here, not interested. Don't care what it does in here. If it gets down to 88, well, I'll have a look at it and decide whether I want to do something or not. So that's how you trade, or how I trade and look to trade stuff in between events when there's not much going on. Let's have a look at some of the other cues before we take a bit of a look in. Eric says, when was the last time the Fed did something not aligned with market expectations? Well, it had been doing something not aligned with market expectations. 4 weeks ago, everyone was trading a pivot and the Fed cutting rates at the end of this year. Fed didn't indicate anything of the sort, but the market was trading it. And now the market all of a sudden now believes the Fed is going to their ceiling, their original ceiling, which it didn't really believe before. If you look at the 1 and 2 year yields, now it does believe, and now it's again running to the other side of the boat, Eric, and it's pushing expectations even higher, rate ceiling higher. There's trades going on for the Fed to get to 6% rates. So there are always times when the market isn't aligned, and it is the market not aligned with the Fed, not the Fed aligned with the market. Always important to note that scenario there. Rob, a US broker just raised margin requirements to 5% on all JPY pairs effective Sunday open.
Is that it?
Was that last Sunday, or from this? Or are they going to do it from this Sunday? I can understand it from last Sunday, given what's going on with the BOJ. I'm not sure why they would want to raise it from this Sunday after the event.
I mean, that's sending the troops out after the war.
Yeah. So I assume you're going to mean it was so this Sunday coming.
No, that's ridiculous.
That's very strange. That's very strange. I don't know. I don't understand that. Well,
no.
There you go. You've got a cheaper trade for the BOJ than you would after it.
Mm-hmm.
But yeah, maybe they're just looking at some weekend geopolitical risk perhaps coming up, but a strange move. But who knows how things. I don't know. I don't know what that means. Usually, you see.
I mean,
Usually, you see margins being adjusted and going higher ahead of an event. So I really don't know why they would do that after the event. Is it just yen, or are they doing it across other things as well? Who knows? Don't know. No idea on that one, I'm afraid. Rob, answers on the postcard.
Yeah, and DJ Kuroda really going out on Sunday. I think Kuroda's official term is ending the 8th of April. And not this Sunday, DJ. I want to answer though one of the other Ali's comment on the Aussie dollar by Credit Suisse. You know, Ali, when Credit Suisse says something, usually they are in trouble the day or 2 weeks later. So we have a running insight. How should I say, joke pattern running for Credit Suisse. Whatever can go wrong, Credit Suisse will be involved at some stage. So I'm very reluctant to believe or to follow anything that Credit Suisse says.
Yeah, case in point story this morning. Credit Suisse have delayed their annual report after a last-minute call from the SEC. Because the SEC raised questions about earlier financial statements. Yeah, it's a long-running joke that if something's gone wonky in the world of banks, Credit Suisse usually are not far from being linked to it. So yeah, I wouldn't take too much of what Credit Suisse have to say about that one. Kay, do you want to? I don't know if you've got anything you want to highlight particularly.
Well, I mean, I can talk a little bit on the preparation for the Bank of Japan, and I stand by what I've said. I mean, I'm not going to touch it, and I know what you're saying as well, Ryan. But everybody trades like they want, and I think there's a lot of other stuff to trade than we could trade in ranges or whatever. Then specifically yen today, because yen today really. And I've been a market maker in banks, in the major banks for over 35 years of my career, and I've been a yen market maker for the best part of 20 of them. And I tell you, I mean, when you're sitting there in a bank and you make markets the day before a possible BOJ move, or a big event, even as a FOMC also, and you're making markets in yen, it's an absolute randomity even on the flows. People from the same as a client class, whatever, they come and do the opposite stuff, and because everybody needs to hedge their books in a different way, and that really, with that in mind, I'm just saying, like, especially when we have this double. This double event, right? Bank of Japan and the NFP later on. So I'm really leaving this alone. But we can identify levels, right? So starting with dollar yen, I think well, this trend line is going to be a little bit higher come tomorrow, but I think 135 and 138 are really. Low 138s here are really where the boundaries for a first leg of decisive action, I would call it. Perhaps not completely decisive action, but if you start to move outside the 135, 138 band, I reckon there is going to be some activity going on. As we've seen, those lows here, 135.30, 135.35. Okay, this one is a little bit higher. We didn't make it as low anymore, and we've been apparently trading along this line a little bit, although moving averages is something subjective. So I reckon this is the band that we are looking at in the immediate. Outside of that, if we look at it on this picture, right? Outside of that, I would say somewhere in the mid to low 133s are probably going to be important, and the top side is really going to be 139.60 is this one, and then probably here the last spike is just ahead of the 140. 140 would be a very big psychological level, I reckon, in today's world. Already 138 is big enough, in my opinion, but 140 is going to be psychological. And I've put just a quick note in our room yesterday about the possibilities that I see, the combination of the possibilities that I see, i.e., Bank of Japan not moving and a very good US labor report, Bank of Japan not moving and a bad labor report, Bank of Japan moving something and a very good labor report, which would be a bit of a mess, and then a Bank of Japan move and a bad labor report, which really, if we get that combination, then we are talking about these levels here. 130 and below, if we really get the combination of Kuroda wanting to prepare his successor without putting too much pressure on him, and if we get really the big domino, which is the US jobs report falling over, I think that's going to really create an absolutely gigantic move. But it's not my base case. That's the thing. My base case is still, in percentage-wise, that Kuroda doesn't do anything tomorrow. In which case, I think this is going to start to go up again. We could be close to 138 again before going into the NFPs. But if we want to stay away from the dollar, there are always the yen crosses. If you don't want to do anything before the NFP, we can trade yen crosses. On the face of things, this looks a little bit failure-y, right? We are back below this 144, low 144 line, but I think really nothing is done before tomorrow's BOJ. We still have the like something underlying, and we find it in those euro crosses, right? If you look at okay, euro sterling has now stabilized, but we went above 89. Euro CAD is higher, euro Aussie is higher. The euro crosses are underpinned, and so in case my base case is correct and the Bank of Japan doesn't do anything, I'd rather jump into this one if we get back above, well, not today, but at the time of BOJ. It will depend where we are. Ideally, I'd love it to correct more and get back to this level, this big level that I highlighted a few times in the past. This high 142s. I'd love it to be around there and to get some more correction in the yen pairs and ahead of the Bank of Japan, and then get no move. What I expect, and from there, then we can start to jump higher again. If in turn Bank of Japan moves, I mean, this one is probably going to be to come really under pressure, this level, and then we'll have to see where we close or where we move around this level. So the top side first in line, but that's very close to the market, 144.15. Then we got a little bit of 144.75. If there is no move at all, and after what Ueda and Kishida already said, that they are going to be in close cooperation and close communication about monetary policy, so and about economic situation, so forget about central bank independence there. I reckon if they don't do anything tomorrow, nothing at all, this really has a chance of revisiting those December levels. Just looking at the Z clock. What else? Why Credit Suisse losses down? Okay. I mean, I think you should really go to look it up, Ali, because and Ryan actually showed why the stock is in trouble today. Yeah. Okay. Special mention to this one in case we get a move. In case we get a move from the Bank of Japan, then we have to look at different pairs, in my opinion, as well. And this could be one that really comes under pressure then, because the Aussie is already not feeling too well after the RBA. There's a lot of uncertainty around the relationship with China. So keep an eye on what's happening there in Aussie yen tomorrow. In case, and that's why I showed euro yen as well. In case we get no move in the Bank of Japan, I'd rather be in euro yen than Aussie yen, for instance, even if both would go higher. But if they do move something, this one is I think is going to be under severe pressure. And look at this level. Then it's around 89.80 down to 89.45. This is a bit of the support zone to me, this one could go all the way down to 88 on any hint of a move, or on any move, even a smaller one from Bank of Japan. So keep an eye on this one. It's rather neutral here, but if the Bank of Japan would move, this one I think is going to be under pressure. Right, next. Yeah, I mean, here, no change. There could be a bit of resistance coming up around 106, figure 5, downside still there, the prior lows on the euro dollar. Still, my main zone is here. Moving on, that's one for tomorrow, I reckon. Cable a bit the same. I did say that this 118 1540 was a bit of a support, and it held there, right? It held in the zone. So I think we still need to watch that. Okay, we went like just a little bit lower, but really the zone 1540 on the cable is still interesting enough to monitor, for me at least. So that on a retest, that may be a really short-term trade to try and pick them up with a very tight stop under 118. If we get down there, for the time being, we are rather going the other way around, and the first resistance is right here, 119 figure 5, I guess, and then above, we're talking about every 50 points really, seeing a bit of resistance. Quick look at the metals, and we still haven't reached the support area on silver. It's a bit stubborn. Just we had a couple of tries below 20 on silver, but it's holding. So for now, I haven't really had an add-on, and it's all about tomorrow, really, right? I'd be happy to get just a tiny slice more if it comes down here before the event. But then it's going to be an ad hoc decision of what's happening. Gold still same ranges, right? The low 18s with 1780s watching below there, and then the top side 33, and then again 42, 45 on gold. I think we hang in between until tomorrow's NFPs. Yeah, one I would look at, and I know I repeat this every day, but if you look at it every day, we trade a bit lower, right? MEX is still one of the best currencies out there. Dollar MEX, as I've been saying, if you want to catch it, you better have a really good butcher's knife, a butcher's glove, to not get a hole in your hands, because it's just heavy, right? It's still heavy, and we're seeing very little bounces. That's the issue with the currency when we have seen lately the all that news of investor flows into Mexico, even the Chinese companies going there, the Mexican status of the US manufacturer becoming stronger again. You will have, we as retailers can try and counter trade it because of it's on a level. But if you look at the real flows, and then you look at the interest rate differentials, investors, they are not even bothered to look at the other side again. The day that risk falters, the risk, you know, when economic data start to go down, when the US manufacturing sector also will be into trouble, that's going to have a spillover effect on its neighbors. Then we are going to see big rebounds, but on a fundamental basis. But in the meantime, feel free to try and catch those extensions or stuff. But I'm just short Euromix again, and I'm taking the pips every day and see what happens. Yeah, and doing it in small and managing the position. Yesterday on this first dip down into the low 1890s, I took some off, and now I'm waiting for a rebound to job it again. Exactly, Brad. Jobbing, yeah, I like it. Yeah, DJ won't go long until low 17s. The 17 and a quarter, around there. And then these lows here, around here, yeah, 17.10. That could be. Perhaps have a closer look to that one of these days. And it's such a slow move lower that it reminds me of the dollar yen in a different way. Of course, it's a different currency. Reminds me of the dollar yen in some periods where they were in deflation, where dollar yen literally went down 10 pips every day. But it was virtually untradeable because the moves were so small. But makes me think a little bit about those kind of periods where it just leaks lower. Without too much of a retracement, and but nobody wants to sell into the hole, and it's and that's just why it just leaks lower. Ryan already covered euro sterling. Anything else? Yeah, just a quick one. Dollar rand is still in breakout territory, right? We're above those two trend lines. One is 1837, the other one is 1845. The previous high 1850 is now already holding. So we're still in breakout territory, and this thing, if we don't get a catastrophic labor report tomorrow in the States, I think we are perhaps going to revisit those highs at one stage. Back below 1837, I would be a bit careful if anyone is in such a kind of position right now. And Ryan, I think that is it for me for now. Transition day.
Yeah, just want to highlight a story that Reuters have flashed up, that one of the largest union groups in Japan has agreed a average 5.28% wage deal ahead of obviously the Shunto Day, which is March 15th. They were asking for 6%. They didn't get that. There's some 18 unions in this group covering 240,000 workers. So they've agreed a 5.28% average pay hike. Those sort of numbers,
right? That's a bit bizarre, because if you look at this is a positive news, really, right? I mean, you look at this is 5.3%. Then Toyota wants to give 10%. Uniqlo wants to give to some of his workers up to 18% increases. And then yesterday we saw this report about the average being only 2.85%. I mean, it's kind of strange to be like below 3% on average. If the numbers that we see come in or drip in are all like way above there.
Yeah, well, I think it's this question of whether it's actual base pay or whether it's, you know, low base rise and incentives making up the rest of it. And if, you know, if inflation running currently at 4.2, 4.3%, that would make it a real wage increase. But if inflation's coming down, then that is a boot. So what do the Bank of Japan do then if inflation comes back down, but wages are running at, I don't know, 4 or 5%? Is that something they would look to change policy on, or would they be worried that inflation isn't higher?
I actually think that because Japan has been struggling with its economy, right, for years now, and the pandemic has only worsened things. I'd say they may, or if Ueda is really the right academician and he will look at everything he said, I think they may not abandon YCC, not not ramp rates higher, but at least widen the band and perhaps start to push interest rates just a tad into positive territory. I think that would be good enough. Yeah, you can do that. But the other thing which I keep on thinking about is all those stimulus packages that the government has put in place. And Kishida and Ueda already said that they would closely cooperate, and that really holds me back from thinking that the Bank of Japan can ever start to raise rates in even ECB style, not even the Fed style, even ECB or but they could be. Yeah, I think they could be driven to move if wages really are that promising and really coming through, even if it's as a response to the inflation and higher prices, than really a driver. Because I still think that Japan is going to save a lot. That's typical for the Japanese, right? They save a lot. But I think, and actually being a saving country, population, it maybe even look good for the Bank of Japan to put rates up just a little bit, take them out of negative or zero territory.
Yeah, just to get to some sort of flat level. Getting zero will be an achievement.
Yeah, because we can't forget that regional banks are crying on the negative interest rate policy. So it'd be better for everybody if really the Shinto period gives decent increases in salary. It would be really a good thing to move normalize just a little bit.
Yeah, so we'll keep an eye on for that. Another thing to watch next week on the 15th. It could likely get expectations running for what Ueda might do at his first meeting. Simon raised a point that Japan, 240,000 out of 120 million population, I think it's about 125 million actually, population is only 0.2%. You probably need to narrow it down to working population rather than total population, because I'm not sure obviously Japan is very heavily tilted to old age people, so the working amount is probably a lot lower than that, so it might be a bigger percentage, but there are lots of unions in Japan, so this is the biggest group of 18, but there's still plenty others, particularly also obviously across the manufacturing sector as well. Right, so not much more to get into really today. As we said, we've repeated it. Just be careful if you're trading. Be picky with your levels. If you don't have to trade, don't trade. Save your powder for tomorrow. See what happens and what the data brings. Speaking of data, we've got our non-farm payrolls competition running. I've just put the link to that in the comments. If you want to win a free month on the ForexAnalytix platform, we offer 3 prizes of that to 3 lucky people who get closest to the number. Even if you're a subscriber already to ForexAnalytix, we'll just add that onto your subscription should you win. But if you want to enter that, click the link, give us your guess. I've already put mine on. Some people like to game the system and wait till as late as possible. It's a lottery, just have a guess. Good luck with that. Thank you very much, Kay.
And Ryan, perhaps good to remind people that reply the number on the original tweet, because if you reply to retweets like on my account and stuff, it won't be registered. It's only replies on the original.
Strict rules. We have strict rules, only because I can't be asked to search the Twitter sphere finding all your answers. So if it's not on that tweet, it don't count. And my rules are final. So unless someone tells me otherwise. Have a great day, traders. Thank you, Kay, and we shall see you all again tomorrow.
Thanks, guys.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.